Hey guys, welcome back to Bite the Book. Today we're gonna take a look at March 12th and the 13th. I pretty much blew up on the 13th. I took a stupid ass trade, but I do regret it. I wasn't supposed to trade. I was up 100% for the week actually, but I decided to continue trading. Took a few dumb losses, tilted, and then more stupid trades followed. I think one of the best ways to combat, taking too many trades is to not only limit the amount of trades, but also the amount of trades that you can do consecutively within, a 5 minute time frame or a 10-minute hour time frame, right? Because I can tell you, I think I took about I took 6 7 8 trades within 10 minutes, right, of the open after the halt, and that shit destroyed my account. Sitting down here talking about it now is just, it's really fucked up, whatever. But I still see a positive outlook for the end of the year, right? If we stretch my account to the end of the year, I'm still okay. It's when I have to make another deposit where I'll be worried, right? Because like I said, I don't want to be making any more deposits right now. I'm in save mode, grind and save, because the next year I want to start paying off my student debt more aggressively. I want to put at least $1,000 a month, so then I can finish that off in like a year, or not a year, but within 3 years from doing that shit, because I still owe about 30,000. But anyway, let's get into the charts. I'll break down a few trades we could have taken. Excuse me. And then we'll just go from there. So we'll start off from the hourly and make our way down to the 5 minute. So 13th. Let's see. I didn't have much on the 13th. We got a nice area over here. I'll just plot. It may change when I move down. So you got that. I'll clone this. We got over here happening. Yeah, it's gonna be a double, whatever. And then we have some stuff happening over here, aftermarket, and then pre-market stuff over here as well too. So we'll move to the 30-minute. Let's see how our open looked. All right. So, so market halted over here. We opened and we gapped, and price pushed down immediately and still closed bullish. When this happened, price continued to go down. This gave us at least $50 $60 move, which is friggin' solid. Yeah, so let's move on to the 13th and see what else happened here. So over here, market opened, right, above the halt area, but then pushed down immediately before going all the way up. On this day, I actually had buys over here. They weren't exactly full margin, but I ended up getting stopped out right over here in this area. But that's okay. You live, you learn. Whatever. As far as entries go, and just opening, price pushed down back to support before going back up. You see consolidation over here, right? This consolidation isn't exactly a valid trade for me, only because there's still stuff to the left. Like if we consolidated down here, then I'd feel a lot more comfortable actually taking buys. Here's a nice bendy trade you could have taken if you were in the markets. Pre-market. Let's move to the 15. So 15-minute. What do we have on the 12th? On the 12th, again, the gap, right? This gap was huge. This gap was a $34 $35 gap, and price continued pushing down, right? Again, you don't need to get this whole move, right? You have a $18 opportunity right there from open. There's a massive wick here. Over here should have been the rejection wick, right? The only concern I have about this is just the timing of it. So by this time it was 1 o'clock. Usually that's lunchtime for me, so I shouldn't be in any more trades after 1. What else is there? There's also an opportunity over here. This wick is massive though, so depending on the timing of the opportunity, you may or may not have gotten into it. When we move to our 5-minute, we'll take a look and see exactly how that would have played out. Here's another great opportunity. Thing again too is that the wick is massive, so you got to keep that in mind when you're actually trading it, because you can get caught up in the wick. Oh, this was even a better wick on the 5-minute. But I was saying, you can get caught up in the wick, right? And this 5-minute could have actually closed up here before pushing back down, because then the body on the 15 would have been a lot bigger, right over here. So we'll go over here to March 13th. On the 13th, right, we see our waves. So price pulls down on the 15, pulls back up, right, from the support. It's minor support, and then this support becomes resistance, right? Because price pulls down, comes back up, and then pulls down another whopping $60 easily. Oh, this went down $72, which is great, to the next support before pulling all the way back up. As far as trade entries go, I think the best trades would have been actually over here and then over here as well too. This one would have been tricky only because of the wick, right? This would have been a good one, but you'd have to really make sure that your risk was intact. So you could have taken it to the top of the wick and that would have been $11, $10. For me, 5, but you got to be happy with what you can take from the market, right? Another good trade would have been over here, but this was at 1 a.m. So you shouldn't really be up at trading at 1 a.m. no matter what type of skills or setup you see. Now we'll move to the 5-minute, and then we'll just break down like this area and also this area, and over here as well too. So let me just circle it. So we got that, and now we got that. Was there anything else? Whoops. Well, probably over here too. Over here there might be something on the 5-minute. If not on the 5-minute, we'll move to the 1-minute and just break that down further. Okay. So now 5 minutes. That's the 13th. Let's move to the 12th. Ooh, 5-minute over here is golden. We're gonna look at this too. Okay, so for me, nothing over here until we get to this candle. This candle was perfect, right? I love these little pullbacks because it's just an indication that we can continue going back down. Over here, I wouldn't necessarily take this only because the bullish candle is less than, or is bigger than the previous candle. Not only that, like if you take a look, this wick is massive. It even comes down $7 too. So like, as far as the entry goes, like you're fucked either way. So let's just look at the open, right? At open, price pulled down, and then actually halted again for 15 minutes, and then pulled down again before pulling up. Once it pulled up, it came back down again, and then it came to try to fill this, right? It did fill it, but not completely successfully because we didn't get the close above, the last high. Then price continued going down. I wouldn't recommend taking a trade, to cover this, because like look how long it took, right? It took one candle to make that big high, one candle to retrace more than 50% of it, and then it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to actually do that thing that happened in 10 minutes. But anyway, as far as entries go, I think your best bet for me anyway would have been over here. And then let's look at this area. This area is tricky. There are plenty of opportunity to get trades going up and down as well too. What are you more comfortable taking? Like, that's the real question. Are you in always sell mode or always buy mode? Excuse me. Well, every friggin' candle here is bigger than $5. Even the wicks, some of them. If this is my setup, I'm taking the setup, right? If it's a buy, then it's a buy. If it's sell, then it's a sell. That's how I truly see it. End of day. Like, I'm sure there are those trades where, you know, you take it, you take your $5, but then you could have gotten a $50 move, right? Those do exist, but we can't get to that point until we're opening up bigger positions and we can take those partial closes. So if I can open up a 10 contract and I can close 9 at my $5 take profit, then shit, I'm gonna do that and let the rest run, right? Because that one that you let run can sometimes be bigger than the whole entire position and the whole profit that you took on the 9 contracts. Like, that has happened to me before. So you just got to be aware of that, right? Like, right now is about taking what you can from the market. We don't need to let anything run until, you know, we're opening up double digit positions. Here's another great opportunity here. I do like this one, right? Taking it after this one, because again, there's $20 right there, but then there's also another $20 over here too, right? And then again, you have to question, like, will I be trading at 3 o'clock? Should I be trading at 3 o'clock? Will I and should I? That is the real question. And that's completely up to you. Here's another great trade too at 4 o'clock, right? Price pulls down, we make a new low, we bend up, and then, oh wow, is that a $3 wick right there? This is $3. That is insane. It looks so tiny. Oh no, it's not. Okay, I'm tripping. But anyway, alright, here's another $30 you could have taken from the market before the market closed. So again, you just got to be really aware of that. So yeah, now we're gonna move over to here. Over here was very clean on the 5-minute, right? We have a push up, we close above the last highs, right? We make a low, then we go up, we accelerate, we close above the highs, we bend, push up again, we bend, push up again, bend, push up again, bend, push up again. Like, these are the plays where if you actually get that and you're stacking, you will be ultimately just fine. You'll be fine. Like, yeah, this pulls down $30, but then it goes back up another 60. So are you really losing? You know what I mean? Even if you get the first one, the very first one, on the very first one, if you close after the pullback, 60, close, $43. $43 is equal to 43 times 4. That's 172 pips or ticks. 172 ticks on the smallest contract. That's $200 easily. On any account size, that's great, right? On 10K, $200 is great. On 5K, $200 is great. On a 1K, $200 is great, right? There's a lot of opportunity for moves. Even over here is great, right? But if you're in buy mode, it might be too risky to take that trade. On the other hand, though, that's $15 to take back to the support, right? That resistance that becomes support before pushing all the way back up. So now let's look at March 13th. March 13th, you see over here, tricky, over here, again, pretty tricky, right? If you play this as a support that becomes resistance, then you'll be fine. But again, it really depends, right? Because for me, I would love this trade, right? But I would instantly have been stopped out, instantly. Where's another great trade opportunity? I think over here is good as well too. The only thing is that the wick on this is massive, right? $8, and then we have 12 for the body, which would have been great too. Here's a great trade when it bent. Very good trade, only because Again, I already have the bend, and that's $20 to the downside, which is very, very nice. Over here, look how solid this 5 minute is. That's 1, 2, 3, 4, 5 bullish 5 minute candles. If we go to the 1 minute, we'll see our bends better. Hi, Mom. Hold on, don't scream, please. So hold on. So we have 1, 2, 3, 4, 5 different bends where we could have taken opportunities on the 1 minute. Over here, what really was happening was Trump. He was making announcements about the announcements about the stimulus that he's going to do to the markets. And that's really what triggered, this massive move to the upside. That's what I was backing on initially, because they had talks pre-market about doing that, but that didn't happen, and so I got caught up in buys over here. Anyway, if you have any comments, concerns, questions, let me know down below, and as always, risk on.